Thank you. And Bună dimineața. I'm sure I said that wrong, but it's great to be in Moldova. I've traveled the world, and when I get invited to somewhere I've never been, I always say yes, because I like to see places I've never been, so it's fantastic to be here in Chisinau, which again, I probably pronounced it wrong. I've only got 35 minutes, so I'm going to talk very quickly, and I know that you obviously speak English because of the previous presentations, so hopefully you'll understand what I say. I've written 23 books, and this will seem like a shameless advert for my books. It's not. It's actually meant to be the development of my thinking over the past 25 years around finance and technology. So don't think I'm trying to sell books. I'm trying to sell the ideas. And when I talk about banking, a lot of what I think about is the past, where it's come from, why it's relevant, and why it's still relevant and essential. And a lot of it is the future, because we can't change the past. We can't change today. We can change tomorrow. So I always focus on what's happening tomorrow. Where are we going? But when I look at the past and present, we've been through a lot of trouble. You know, Britain left the European Union. I actually was asked a question on Wednesday in June in 2016, did I think Britain would vote to leave? And I said, absolutely not. I bet my house on it. I lost my house. And that's caused huge turmoil in Europe. In fact, right now, France, Germany, and other countries are having big issues around whether they can keep this union together. The importance of the union is to be able to compete with China and America. If the union breaks apart, then that won't work. So big uncertainties in Europe. We've had this massive pandemic, which meant that we had to stay at home for almost 2 years, most of us, except for politicians. And that's caused us big challenges around how to keep being effective. And at the moment, it's quite interesting because there's a big discussion around working from home versus being in the office. Some countries are very happy to allow people to work from home. Others are saying you have to be in the office. And then we had this big instability in the special operation between Russia and Ukraine. I live in Poland, you know, and in April 2022, 3 million Ukrainians fled to Poland to escape the special operation. You know, and Poland has 39 million people, so you can imagine 3 million people fleeing into Poland caused big questions. The world is unstable, and yet we've lived for 20 years where it has been pretty stable. And at the moment, that's resulted in lots of inflation, lots of questions around the economy and where we're going. In particular, in fintech, it's led to what I call the fintech bloodbath, which is the fact that most fintechs, in their fledgling early stage funding process, are finding it very difficult to get investment. It's very difficult to grow. And the valuations of companies that were unicorns have collapsed. When you look at Klarna, Adyen, or even a company like Stripe, which is one of the poster childs of fintech, their valuations have gone through the floor in the last 18, 24 months, as has crypto. You know, we're in a crypto winter because basically the pricing of crypto had risen massively because people believed that was the future for where they should invest, and now it's completely collapsed. It's down by 80, 90% for most coins. It's hard times. The thing is, in hard times, the going gets tough, the tough get going. I prefer the Billy Ocean version to this one. This is Robert Schuller, by the way, author and a great man. But when the going gets tough, the tough get going. So what I ended up doing during the pandemic is I spent a lot of time with my two little boys. These are my two boys. They're 7 years old, Eddie and Freddie. And you may wonder why I mention them. Well, the reason I mention them is that it created something in me that created something very different. In particular, it led to understanding that they think I'm Iron Man, and I told them, no, this is Iron Man. Maybe not. And I'm actually much more like this guy. But I ended up writing 5 children's books. And so in tough times, it creates new ideas, new ways of thinking, new ways of doing things. So I changed. So that's kind of the present, where we are right now. Lots of instability, uncertainty, difficult times, but also inspirational times. You know, they always say that crisis equals opportunity, and innovate yourself out of crisis. I think that's a good message. When I look at where we are right now and have a reality check, I mean, people think the world is a whole bunch of countries, over 200 countries, but the internet does not think that way. When you look at the world through the network, the world is just one connected globe. There are no borders. Cryptocurrencies do not recognize borders. This is a big issue for governments because obviously they want to keep control, and what keeps control is keeping control of the economy, and what keeps control of the economy is keeping control of the currencies used in that economy. If you lose that control, it's anarchy, or is it? Moldova doesn't exist, except we think it does, because of government and control. If we lose control, it's interesting. Time doesn't exist. This came from Albert Einstein, although it didn't come from him. I mean, obviously it was there before, but you know, it's really weird when you think about time. What time is it now? Oh, it's just made up by the world we live in. If you travel through China, you can go from west to east China, and it's just one time zone. And yet, when you think about that, what a huge country. It can't be one time zone. If you go from West China into Afghanistan, you lose 3 hours. And money doesn't exist. We just made it up. You know, money is just a construct that's there by laws and governments and national economies and domestic perspectives. So we need to think about things differently because the internet and the connected world we live in has changed everything. The world we grew up in no longer exists. Think different. And that's what technology has done for us. It's enabled us to create whole new ways of thinking about things and doing things different, such as Apple becoming a bank. Luckily, they're not a bank. They use Goldman Sachs, or at the moment. Maybe that will change. I don't think technology companies will ever become banks, and the reason is that it's too much work. Why would you want to do it? But interestingly, technologists are very naive. You know, even Bill Gates is a bit stupid. He said in the 1990s, we need banking, but we don't need banks. And he's completely wrong. And the difference in banking is all the regulatory compliance and government structure that goes over the financial system because it controls the economy. You know, banks didn't step up and say, we want to have 300,000 regulations, please. They have them for a reason, and it's to keep economic stability. So in my view, only banks can do banking, but banks have a problem, which is that they need to do it digitally and they don't know how. And that's what I've spent the last 2 decades talking about. So let's start with Digital Bank, which I wrote in 2014. And the basis of this book was that banks are based on physicality, distributing paper through buildings with humans, checks and cash. But they need to do it digitally, distributing data through software and servers. And the meaning of that is that if a bank at its core is physical, what they were doing is adding technology to their physical structure. And what they need to do is turn that on its head and have digital at the core and add physical to the digital structure. Very difficult to do. They had a back office that was a big head office full of people providing services, a middle office that was huge infrastructural cost, that was providing the connectivity between the back office and the front office that was all branches for face-to-face meetings. And that structure is broken. That structure was based on a complete thinking of physicality. It's an analog structure. When I look at the digital structure, we move to platforms where it's cloud-based. So everything is in the cloud. Everything is connecting through the network. The front office is all about the user experience, which is about connectivity of devices. And it's not mobile phones, it's any device that you use, whether it be your television or your fridge or your car. And the back office is all about the data and the data analytics. I call it the apps, APIs, and analytics structure. That's the digital structure. And the problem most people have in banks is they do not understand this structure, particularly at the executive level, because they're not technologists, they're bankers, financiers. The company that really understood this very early on, because they're a new company, is Alibaba. And I've spent a lot of time with Alibaba in China. And what I love about this chart is the front office is their super app that provides everything you need in commerce and service and entertainment, linking through Alibaba Cloud to the back office, which includes Alipay, which is the biggest payment system in China. But my favorite part of this is, I'm not sure if clicker works, no it doesn't, is this bit. Digital marketing and data operational platform. The data analytics, because that's the jewel in the crown. And that's actually the jewel in the crown of most financial operations. And they call this Ali Mama because Mama looks after Baba. That's the core. During the pandemic, we've seen a lot of things changing. The high street and the main street has moved to cafes and tattoos, whereas the banks have disappeared or are disappearing very quickly. Bank branches have been closing everywhere very rapidly. In the developed world, I need to qualify that because in some of the growth economies, bank branches are actually growing. And it's different by every country. But it's due to digitalization. And I said that digitalization is quite difficult for most banks' executive leadership because they don't understand it. So I thought about that and thought banks aren't stupid. They actually have thousands of people who are doing good jobs and leaders who are very effective managers. So why is it they find it so difficult? And so I went and interviewed a range of banks around the world to get their views and to understand what they were thinking. And I think I ended up believing that they have Stockholm Syndrome. And Stockholm Syndrome, if you don't know it, is something that means that you end up loving the way it is and you don't want things to change. This is my dog. He's very stupid. His name is Ziggy, after Ziggy Stardust, although being in Poland, my father-in-law calls him Siegfried for some reason. But Ziggy, when he was a puppy, he was really annoying. He was chewing and biting and scratching everything and just destroying everything, which is what I guess most children do. Now he's 3 years old. He obeys me, and he knows that he mustn't run away, and he follows me around, and he's very well behaved. And I think that's what happens in companies, that you join a company, and to begin with, you might challenge everything and argue, and then the organization gives you Stockholm Syndrome, and it brings you in. And I'm sure you know Stockholm Syndrome. It was the 1970s bank robbery, where the robber became loved by the people in the bank branch, so much so that they paid his fees for the court case and would not testify against him because they got on so well. And I think that happens in companies, that you grow up through the institution, and by the time you get to the executive, you have no rebellion anymore. You just do what you're told. You keep things the way they are. And the problem with that is that, as Charles Darwin said, you don't survive if you don't change. If you conform, then you might be the most intelligent or the fittest or the fastest or whatever, but you die because you don't change. And the question is, change into what? And that's what I've been working on a lot. I think most banks are a bit like Frankenstein. I call them Bankensteins. Frankenstein's monster, Bankenstein's monster. Most banks have leaders who have never wanted to take the risk of changing systems, particularly their back office systems, because the risk is too great and the cost is too high. But because of that, they've become cemented in their Stockholm Syndrome of systems, because they don't understand technology and they don't change effectively. Bankensteins are the ones that will definitely die, because they can't keep up with fintech and the world that's changing. They've built what I call the faster horse. We don't want faster horses. We want horses that are fit for the world we live in today. And that's why fintech has grown so quickly. I think the breakthrough for fintech was when cloud computing and smartphones came around, because those two technologies offered a massive opportunity for change. And that was back in late 2000s. I remember saying at a conference like this that the iPad would massively transform treasury systems, and people laughed at me. And yet it has. Tablet computing and technology has changed everything. When I walk into most bank boardrooms, the people who run the banks are people like me. Grey hair, old, bad liver, bit of arthritis. And then I walk into most fintech firms and they're like this. They're young people. Massive difference. And the two are now coming together. But fintech for me is the fin, which is wanting stability, reliability, security, stability, and resilience. And tech, which, like my puppy, wants to chew and bite and scratch and change everything and destroy everything. How do the two come together? And they are coming together. We're now seeing some banks buying fintech companies, some fintech companies buying banks. But my main thought is around this structure of open platform systems using apps, APIs, and analytics. And I don't actually like the term open banking, because it implies to the outside-in view that you're giving my data away to people and it becomes unstable, insecure. I don't like the word embedded, because it's an inside-out view. We're embedding your data in structures. I'd rather talk about invisible banking. I don't like the word channel or omni-channel. It really bugs me. Because channel is like saying, I'm going to tape record something. It's a 20th century term. I'd much rather say omni-access. It's about accessibility and invisible banking. It's about better banking, which is a much better way of talking about open banking. And when we talk about fintech and open banking or better banking, the reason it's better is it includes everybody on the whole planet. It's not just for those who are rich. The poorest people on the planet are the ones who pay the most for financial services because they don't have access. If you have omni-access to invisible finance for everyone, then the world changes. And that was the theme around Digital Human, where I actually spent time with Alipay. And it was interesting with Alipay in that they are a company that are already on their 6th generation of systems, architectures and structures, and it's only a 20-year-old company. If you talk to any major banks, when did they redesign their systems architecture? Most of them haven't done it since 1970 or before, and yet Alipay does it every 4 years, 3 years. And I said at the time that mobile finance would include everybody on Earth. I did a presentation at the United Nations, which was a great honor, and I said that everyone on Earth is now included in the financial system because they can trade, transact, and talk through the mobile network, and quite a few people were laughing at me. But I remember about 30 years ago that I said to, sorry, I'm going to jump a few slides because I want to get to, no. I said to a journalist that we would eventually get to trade and transact from the top of Mount Everest. And this was in the 1990s, and they also laughed at me. And yet we now have people doing payments on the top of Mount Everest. There was a Standard Chartered-sponsored Mount Everest climb where someone actually did a transaction from their mobile phone on the top of Mount Everest. You know, things do change. I think from the view of where I sit, and this is the advice that I give to most fintech firms, the banking system isn't broken, it's just needing to be redesigned. And the banks are finding it difficult to redesign their systems. So what you need to do as a fintech company is fix the things that banks do badly and focus on the things that banks don't do at all, like financial inclusion, financial literacy, financial wellness advice through digitality. And equally, one of the things that's quite clear to me, and this has come through from the fintech community, is fix the planet. You know, when we look at the way in which we view the planet, a lot of us care. We know there's a climate emergency, according to the media. We know that September's been one of the hottest Septembers on historical records. You know, 1% degree warmer than ever before. The financial system actually is instrumental in that structure. 71% of the carbon emissions are created by just 100 companies over the last 50 years, and they're the fossil fuel firms. And banks are lending those firms trillions of dollars, something like $7.1 trillion since the Paris Accord have been lent by banks to those fossil fuel firms who are creating those carbon emissions because it makes money. How do we change that? So that became a big theme for me through the fintech community, because a lot of fintechs are talking about how can we make the world a better place and solve the things that are now bothering us, like wildfires and floods. And that became the theme of Digital for Good, which is what can we do with finance and technology to make the world a better place and do good for society and good for the planet. And I ended up getting a group of friends from 5 continents. Someone said to me afterwards, why didn't you get the Arctic and Antarctica to contribute? But I didn't know people there. But 5 continents to talk about how can we make the world a better place through finance and technology. And a lot of it is to do with 2 groups of pressure on the system. One group are pension funds and investors. the institutional investors, particularly the bank clients, and the other is the activist consumer like Extinction Rebellion, who I included in the book. They wrote a chapter. And these two pressure groups are changing the bank's perspectives and thinking. Whether it's fast enough, I don't know. I don't know whether we'll meet the needs of 2050 for net zero emissions. But the pressure on institutions to change their thinking of how they invest is very clearly high on the agenda. And when we look at the link between finance and technology, a great example is one of the people who wrote in the book is the head of innovation for Rabobank, which is a Dutch bank. And they are an agricultural Dutch bank. They grew up investing in farms and the farming system in the Netherlands. And they are using the integration of agri-tech with fintech to change the country. So what they do, for example, is provide nanotechnology for the farmers to put into their fields that monitors the field's productivity, acidity, rainfall, and more in a real-time system that's linked to the banking system, so they can see the likelihood of the farmers' fields producing crops that are effective and providing insurance against crop failure in real time. It's a fascinating case study. So my latest book, newest one, it seems like a shameless sale, but I started with the idea of talking about decentralized versus centralized currencies, looking at the future, the friction between cryptocurrencies and centralized currencies, CBDCs, stablecoins, cryptocurrencies, decentralized finance versus centralized finance. But I ended up calling it intelligent money, when money thinks for you, because we should be using technology to make our lives better. And if we don't have to think about money because money thinks for us, that's what should happen using artificial intelligence. And that's exactly where we are today. When ChatGPT launched, it shifted my thinking for the book, which is coming out next year, to saying we need to think, well, actually, no, we don't need to think about money. Let the system think about money for us. I talked 30 years ago about intermediaries, where the intermediary is our intermediary for money in the system. We don't need to have ourselves looking after thinking about money. And that's coming. The integration of artificial intelligence with humans, the integration of systems with humans. When we look at the whole range of things that are happening in the future around technology, we're progressing every day. We're changing every day. If you haven't used ChatGPT, I'm sure most of you have, it's amazing how you can produce essays without actually having to write anything. You just ask it to write it for you. And that's what will happen with money. We won't think about money. It will be managed for us. I asked the other day what happens when you add gaming and artificial intelligence to the metaverse. And the answer I came to was, it will run everything for you, but you'll need to have an intelligent bank integrated into that system. And it will still be a bank, because unlike Bill Gates, the reason why banks will always exist is they're regulated and licensed and secure and stable, and they're backed by a government. And you can get your money back if it fails. I mean, right now, there's a big question in Britain about Metro Bank. Is it going to fail? And every news report says, if it does fail, you'll get £85,000 secured by the financial compensation scheme. I've invested in cryptocurrencies and lost a lot of money on crypto because it's not backed by a license or a scheme. So that there'll be banks in the gaming metaverse, and there'll be the banks we're used to. And I think it's interesting when we talk about artificial intelligence as, is it a good thing or a bad thing? Are we going to fall in love with it? Like, Joaquin Phoenix did in the film Her, or is it going to be the cyborgs and the Terminators that destroy us? I think it's a good thing. But do I need it? I don't know. When it comes to money and finance in the metaverse gaming world, as I say, we'll still need banks, but we'll have different currencies and different ways of thinking about money. And I talked about that quite a lot in the past, in particular about cryptocurrencies. I've interviewed a lot of people, from Chris Larsen, who was one of the co-founders of Ripple, through to Vitalik Buterin and Brock Pierce, who runs the Bitcoin Foundation. I think it's interesting when we look at cryptocurrencies, because for most of the last decade, since Satoshi Nakamoto's paper, most banking people have said Bitcoin is really bad. I hate it. And then they all said, but the blockchain is good. We could use the blockchain. And in the last 3 years, 4 years, it's been interesting because a lot of banking organizations are now saying, actually, cryptocurrencies are a digital asset that we will provide custodial services for. And they're offering banking financial services for crypto. And equally, when they say Bitcoin is bad because it's not backed by anything and it's not stable and it's not licensed or regulated, a lot of the community in the crypto community, who I know very well, turn around and say, well, the banking system's also not reliable, even though it is backed and licensed and regulated, because it fails on quite a regular basis. When the 2008 financial crisis hit, and Washington Mutual and Bear Stearns and Lehman Brothers went under, there's a famous quote from Jamie Dimon, who's the chief executive chairman of JP Morgan Chase, that his daughter asked him, what is a financial crisis? She was 7 years old. And he said, something that happens every decade. You know, it happens every few years. And it does. We've seen it happen often. I guess my final thought, drawing to a close, is back in 2007, I was writing my first book and saying that the future is all about what's happening in the southern hemisphere, in Asia, India, Africa, and South Americas. And I think that the future of technology and finance is actually presented from those nations. And we've seen it happening from those nations with the examples of Ant Group with Alipay, or Paytm in India, or M-Pesa in Kenya, or Nubank in Brazil. I've already said that we can make a payment from the top of Mount Everest. So everything is now included in the network. And in the last 20 years, we've seen that transformational change. In conclusion, the bank of the future is going to be real-time, all the time. We used to work on an annuity basis, annual insurances, annual credit card, APR. We need to work right now, in this second, today. We will have institutions that look at life events rather than looking at just banking money. They will manage marriages, deaths, births, the way we live, better banking. They will be our digital asset managers. So instead of thinking about asset management as a physical thing, like a house, think of it as a digital thing, like our data, and particularly the data that's important to us. And living in a better banking world in apps, APIs, and analytics, you don't work as a single institution, you work as a curator of all the things that you have to bring together to give the customer the best experience ever, to do the other three things, real-time, life events, digitally. Final reality check. Banks are closing down lots of branches. I think you still need branches, but going back to what I said, digital core, physical on top, not physical core, digital on top. Turn the business model around. We need to think about how we use artificial intelligence to make sure it's appropriate I just got scammed. PayPal. Great. No. And, oh. Language. Things don't always work the way you expect them to. And by the way, I am Iron Man, just in case you wondered. Thank you.